cut your ears off to you, rascal. I'm gonna cut your ears off to you, rascal. I'm gonna cut your ears off to you, and something else that belongs to you. I'm gonna cut your ears off to you, rascal. I'll be glad when you dead, you rascal. I'll be glad when you dead, you rascal. Now don't think I'm telling no story, 'cause if I don't see this glory, I'll be glad when you're gone, you rascal.
Yeah, yeah. Turn me up. Turn me up. All right. Good morning. How are you? Como allez-vous? Jumbo. Ni hao ma. G'day, mate. Hello, 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 hello. All right, good morning, everybody. Welcome to FX Street Trade Non-Farm Payrolls Live. Number, I don't know, 192 months? I think it's the 16th year anniversary. Is that right? 16 years of doing this live stream every single month. 16 years in a row. Is that right? Anybody know? Well, first of all, can you confirm that it's streaming on the proper... Is it streaming or what? Yeah, okay, good. Quiet and hear crickets. So anyways, hey, welcome, welcome, welcome. Let me remind you that trading is risky. It's not appropriate for everyone. Actually, you know what? Let's go back. Let's do the original disclaimer I used to do a million years ago. Welcome to Trade Non-Farm Payrolls Live. Let me remind you that the purpose of this stream is education. This is not an alert service. I am not here to make trade recommendations. I will, however, conduct technical and fundamental analysis with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Cool. Hey, by the way, notice the ticker tape here, and then notice the ticker tape at the bottom. They're the same. Cool. That's nice. So welcome, welcome, welcome. I can't run a poll because I don't have boss mode. Our moderator has boss mode. But if I were to run a poll, I would ask you, what currency is on your mind, or what asset? Are you interested in euro, dollar, yen, pound, Bitcoin, gold, oil? What would you like me to cover today? Please just type it in so I know what's on your mind. I want to know how I can help. Now, don't go specific. Tell me general, like, is it dollar or is it Swissy? Because I look at dollar Swissy, I'm like, why would you want to trade that? So it's, yeah, I don't want to figure that out. But why would you, like, for example, Anders, why would you trade two funding currencies? Strange. But anyways. USD, yeah, I got you there. Larry wants some gold. Sure, Larry. What else? How can I help? Wild South Australia. Okay, Aussie, that sounds good. Wild South, I'm trying to think. That's probably not the southeast, it's probably southwest Australia, huh? I'd like to, Barossa Valley and McLaren Valley. I'd like to go out that way as well. Pound dollar, okay. JGB wants dollar, yen, peso. Okay. By all means. Brian's going for the Bitcoin, huh? Bitty, bitty, bitty. Can't you see? Sometimes your trades just hypnotize me. Adam's like, hey, how am I doing? I'm doing great. I just got off an airplane about 5 hours ago. So, yeah, I'm here, man. I'm alive. How are you doing? It's bright. It's hot. Anything else? Help me help you. Tell me what's up. Yeah. Right on. Right on, B-Man. Yeah, guess what? It's hot. What is it? It's not 40C yet. It's probably only 32C. Hey, thank you, JGB. Anything else? Let me know. This is going to be a long, right? I don't know if I'm going to do 3 hours. I don't have enough sleep, but I'll do 2, maybe 3. Are we expecting a yen to swing today? That's not how non-farm payrolls works. But let me address the swing part of that. A medium to longer term move in the market. Yes, but that started about, well, let's say on Monday. So it's Friday now, right? OMG, 36 is legit. That's pretty hot, man. Not for you guys, but for everywhere else on the planet, 36C is hot. Well, 36C is better than 46C. Yeah, I don't own a private jet, but after flying in first class this weekend, what a shit show that is. It's part of my French. I'm like, I can't afford a private jet, but boy, yeah. On says possibility of recession. Well, we'd have to talk about that. I notice there's a lot of fear by experts, and they talk about that. And I know normal human beings are emotional, so we'll have to address that. Ideally without the emotion, and we can pick it apart right here and see what that means. All right, so some dollar pairs, some yen pairs, crypto. Nobody cares about oil. Nobody cares about euro. Nobody cares. Well, interesting. All right. So we'll go through that. All right, so we gather here today to conduct and trade this thing we call non-farm payrolls. The interesting thing about this is there isn't a report called the non-farm payrolls report. Okay. Sergis says, hey man, what's the global sentiment of majors ahead? Well, the discussion on the street is 50 basis point rate hikes coming up, 2 in a row. So we'll see. Now, then you're like, well, what's the sentiment of that? Well, you have to decide what side of the table you're sitting, because that's what's being discussed. And those are variables. Does the Fed raise by 50 basis points? Yes or no? And then do they raise twice at 50 basis points? Yes or no? But then we may disagree of what that means. And there was a guy on Bloomberg this morning as I was getting ready for our event today, and he very clearly and articulately explained that the Fed raising interest rates high like that would strengthen the dollar. Cool. I disagree with him. I understand he has an education. He went probably to an upper mediocre school. Cool, good for him. And now he gets to talk on TV. Great, good for him. But with all due respect, I believe he's wrong. So there you go. Even if we agree on the variables, the outcome we could disagree on. So therefore, it means whatever it means to you. What's up, Stevie? Okay. Murphster, Murpharama. Yeah. Let her Murph. Okay. Brian says, I highly doubt. Well, we're not about doubting or thinking or guessing. So it comes down to the data. Anyways, let's move on. So this thing called non-farm payrolls actually is two different reports, the establishment survey and the household survey. One obviously is measuring, gathering a data set from businesses, and the other one is gathering a data set from households, from regular old people by knocking on their door and calling them on the telephone. So the two samples are quite different. One of the data sets is a sample of looking at payroll stubs. Okay? Just like, give me your payroll stubs. Okay. The second one is a survey. Hey, how you doing? I'm the U.S. government. Just wanted to ask you a few quick questions. How many people live in this household? How many of those adults between the ages of 15 and 155 have a job? Okay. That kind of stuff. It's a survey. Now, the problem with that is it measures quantity but not quality. So the person at the door says, yes, I have a job. However, I have a PhD in artificial intelligence programming from MIT, but I work at Starbucks part-time because I can't find a job. And the survey person says, so that's a yes, you have a job. Well, yeah, but I'm highly qualified. I can do it. So ma'am, I understand you went to MIT. I understand you have a PhD. I understand. Yeah. Just answer the freaking question. Do you have a job? Yes, I work at Starbucks. Thank you. Or then they say, well, what about that guy over there? Hey, Jimmy, this surveyor wants to know how many jobs you got. Jimmy says, I got 3 jobs. So the surveyor says, oh, so you're working. Yeah, but I got 3 lousy jobs just to earn enough money to pay my bills because I can't find one good job. Oh, okay, good. I'll mark it down that you're working. Okay? So you can see there's some flaws in the data set. Also, the surveys are done with a pretty small sample size, in my opinion. Now, I can't remember. Is it 2,000 businesses or 20,000 businesses? I can't remember. But either way, they take the data, the sample size, and you can see like it could be highly skewed. They could just ask the wrong companies, right? And kind of get a weird number. But what happens is they gather the data set, they analyze it, and through the magic of fuzzy logic, pa-chow, they extrapolate and say, this sample size, when analyzed, will predict the entire country of 360 million people. You're like, wait, you didn't even ask 1%. You didn't even ask 1/2. You didn't even ask 1/100th. You didn't even ask 1,000th, right, of the business industry, but you got it all figured out. So it's interesting anyways. So do we actually care? Well, we care if we're losing jobs. So the economy was doing poorly because it got shut down during COVID. Oops. And then, I don't know what I just did. Okay. And then we had Delta. Then we had Omicron, okay? And when people are losing their jobs, that's really bad because what it does is it reduces income. Why does it reduce income? You lose your job, so you say, we're not going to eat at Applebee's. Why does that matter? Because your spending is equal to somebody else's income. So if you lose your job and you don't spend, you decide not to go to Applebee's, okay? Then the waitress at Applebee's doesn't earn money. Then Applebee's is in trouble and lays her off, so her spending goes down. And therefore, someone else's income is lost, and you have what we call a vicious cycle. Okay? Coined by someone, I can never remember his name. Unbelievable. I never understand why I can't remember his name. But the first African-American economist who won the Nobel Prize came up with this term, a vicious cycle. There's a virtuous cycle and a vicious cycle. Gary would know for sure. Gary, if you're in here, let us know. I don't know why I can't remember his name. But that's what happens. And so if you lose your job, you reduce your spending, right? Thomas Sowell? No, I don't believe that's right. He's right. Anyways, he's Caribbean, went to the University of West Indies, which is a fantastic school, by the way. Paul Volcker wasn't black. I said African American. That's not correct. He's black. It just drives me nuts. It just blank. But anyways, we get into this okay. So here we are. Is that what we're worried about right now? Well, we're worried that maybe things get too expensive because of inflation and you can't afford to eat at Applebee's, so you don't. And then what happens is it slows demand down. But we don't have a demand issue now. We have a supply issue. And I don't mean like you can't get that cheap new iPhone. Okay. You mean that Samsung from 3 years ago they put an Apple logo on? Lewis, thank you. Thank you, Brian. That is correct. Lewis is interesting if you study his work. Not only is it good economic work, but the prevailing thought of the time was that poor countries were poor because the people living there were inferior to white people. And all the white people knew this. So Oxford, Cambridge, Harvard, they just said, that goes without saying. If you're of color and you live in a poor country, you're just not capable of high productivity, and that's why those countries are poor. So Sir Arthur Lewis said, well, I'm from the Caribbean, and I'm black, and I think that's bullshit. So he's conducted research, and he proved it's not about race. It has a lot to do with the externalities, like Northern Europe just happens to be in a fantastic place to grow things. And besides growing sugar cane and tobacco seeds in the Caribbean, the soil just isn't really that good. And it's freaking hot. And this, that, and the other thing. And it's just not really as productive, especially when you're looking at a rural agrarian economy, which would have been prevailing at the time. And he proved it wasn't race, that it had a lot to do with externality. But he coined the vicious cycle and the virtuous cycle. Things like if you have an externality like your climate in which you live is good for growing things, then the land is more productive, you have more excess, and therefore you have more to trade. Therefore, you have higher levels of income and household wealth. Therefore, you eat a better diet, you live longer, you get sick less, your children get more educated, and all of this leads to more and more and more and more and more productivity. And in other economies, they may not be blessed with such natural resources. Okay? It's hard to grow corn on a rock in the middle of, a tropical ocean. Or if you live in a desert, it's kind of hard to grow corn. It's not because you're inferior. It's kind of because corn doesn't grow in sand well, especially if it doesn't rain none. Okay. So anyways, that's his work. So if you find that interesting, it's well worth the read. Yeah, he was an amazing person. Okay. I was once doing research on the the Central Bank of the Eastern Caribbean, the ECCB, the Eastern Caribbean Central Bank, and I pulled up some research and I pulled up some speeches of the gentleman that at the time, this was a few years ago, who was the head of the ECCB, and I didn't know anything about the ECCB, and I was on my way to visit the ECCB, so I'm like, I need to do some research. And the guy in charge, I thought he was phenomenal. And I'm like, where did this guy come from, right? And he got his education at the University of the West Indies, and it must be a fantastic university with not only good education, but smart mentors that are grooming people and stuff. And anyways, you should take a look. Yeah. Ragnar. Yeah, Brian Miller's like, yep, hard to grow corn on a rock no matter how smart or how white you are, right? So, but it was funny, that was the prevailing trend. Hey, it was science. So anyways. Cool. So anyways, I wrote an article many years ago for FX Street on how to interpret and trade the non-farm payrolls. And I actually created this list. Now there's a couple of things added to it, but FX Street didn't have this before that report. And now they report this, which is good. It's good. Good. Love it. Right? They put a lot of time and effort into really busting it out. Cool. So one of the things you want to look for is prevailing trend in the data, not in the currency. Okay. Okay. It's kind of like there's a difference between the market and the economy, right? So in this case, we'll get to the currency stuff later because there's a lot of other things going on. Okay. But you want to look at the trend in non-farm payrolls, the Challenger, report, And again, nobody ever talked about this before me. FX Street never covered that, right? Okay, so now it's there. Initial jobless claims and continuing claims. We don't have services, but we have manufacturing later today, so it's hard to use that data. I mean, you can guess based on what it was. And you put that into your model. Consumer confidence, I don't really care about. I think it's stupid. Conference board consumer confidence, I think that's stupid. Honestly, if you study behavioral finance, you wouldn't give two hoots about consumer confidence. I do not believe people are rational. So if you're using this in your model, you're using a very old form of economics that's based on the idea that people are rational. So you ask somebody about consumer confidence, and you're like, "Hey, Is smoking cigars and drinking alcohol bad for you or good for you? And they'll say bad. And then later that evening, they're at a cigar bar, drinking a Manhattan, smoking a cigar, and you approach them, you're like, dude, what are you talking about? You said this was bad for you. Yeah, I know, but I like it. And I'm sure you can find some version of that somewhere. Hey, sitting and watching TV for 3 hours a day? Yeah, good or bad? Okay, bad. People do it all the time. People are not rational. They like to think they're rational, and they're somewhat rational most of the time. But what behavioral finance will tell you is that most of the time, most people are mostly rational to their best ability, but not to all abilities. And then when shit hits the fan, pardon my French, people panic. They're not rational. They're irrational. They're 100% emotional. And so therefore, when it counts the most, they're most irrational. So I don't care about people's opinions. I just don't. So I would not put this in my list, and I didn't put it in my list. Okay? My classic story that I tell, and this is something I've told this story for probably at least 20 years. I'm not sure where I got it now. It's so old. It's probably even pre-Forex, and I've been doing that for 20 years, right? But anyways, a classic example is when Sony was about to release the Walkman for the first time. Okay? And no one had ever walked around listening to music on a portable music device. The idea of wearing tiny headphones and carrying around a cassette tape player on your hip was just radical. There was nothing like it. It was a game changer. So they did some surveys and they brought in some test groups, and they bring them in through the office, right? And they all sit down around a big table. Somebody comes in and hands out a bunch of Walkmans. Cool. And they got to play around with it and put the headset on, listen to the music and all that kind of stuff, and press the buttons and play with things. And then they had to answer a survey. They're answering all these questions. You know, I don't know, how do you wear it? How do you think the sound is? Is it easy to push the buttons? And is it easy to lock and load and all that kind of stuff? And they answer all these questions. And then, of course, the last question is, what color would you like? Red, blue, green, gray, black, brown, yellow, orange. Okay? And they all said black. Black, black, black. Make it black. Makes sense. Pretty popular color. Then the other door opens and they go to the exit lobby. And in the lobby, they have boxes and boxes and boxes of Walkmans. And they say, well, thank you for doing the survey. Please take a box on your way out. And they all grabbed yellow. Yep. So that's that. Yeah, it was a game changer, made up. I had one. It was yellow. And they were all yellow. Thank you for your opinion, Siam. Great. Okay, ADP is important because it's again, it's much more of like establishment survey. This represents small and medium-sized businesses where the headline non-farm payrolls include sort of larger corporation data, where ADP will show you the trend in medium and small size. For example, ADP is a type of company that does your payroll for your company. Okay? things like doing the taxes and all that kind of stuff. And if your company offers a retirement account and that distribution to that, and sometimes you do like those benefits, and there's all kinds of services they offer. But you have to think about, well, what kind of company would do that? Well, a company that doesn't want to hire a bunch of HR people and a bunch of accountants because they're expensive. They're a cost center. And you're just a small company. You're only 100 people. You certainly don't want to have 5% of your workforce. All they do is checks. So instead of hiring people and having that liability and that expense, right, the internal expense, you hire ADP and they do it for you, and it's a different type of expense, but you can write it off. And of course, you don't have the liability of having 5 people that all they do is process your payroll. So you have to think these companies are, let's say probably 200 employees or less, probably mostly 100 employees or less. Okay. And then JOLTS has to do with how many jobs are available. Okay. Where NFP is how many jobs were taken. Okay. And versus JOLTS is how many jobs are available. And I did study this at Harvard, and one of the things we looked at is over the last 50 years, not just the number of jobs available versus the number of employees available in the workforce, but there's a dichotomy now of there's lots of jobs, but the people available are not capable of doing the job. So you lose your job as a coal miner in West Virginia, and Apple is looking for people to join their artificial intelligence division. So the coal miner applies. Okay. Well, may not get an interview. You know what I mean? Yeah. Cool. You guys, everything good? You guys happy? How you doing? So while we look at this, okay, 678 jobs are added. Look for a revision. Okay, look for a revision. We'll have to pay attention to that. And our headline is going to be almost 500,000. Okay. Challenger, Christmas, and Gray. It just says, right? You have to know this. So you have to go to Challenger, Christmas, and Gray. To be specific, if you want to know where to get the data. Yeah, Bubba, got to know this stuff, brah. Okay. Okay, what this is telling us is mass layoffs. What's a layoff? Well, if your company lets Kathy go right? Kathy's fired because every single day, 3:45, Kathy goes over to the break room and burns a bag of microwave popcorn and stinks up the whole freaking office. And they're sick of it, Kathy. Sick of it. And they fire her. Get out. Finally. And everyone cheers. Okay? And they say, no more burning, no more popcorn in the break room, and no more birthday parties. If it's your birthday, don't bring cake. We're not singing. We're not meeting it. Just sit at your desk and do your damn job. Okay? That's the new rule. Great. But sending Kathy home forever, that's not a job. That's not a layoff. So a layoff is many people fired or let go all at the same time. So let's say a company sends home 300 people. That would be counted here by Challenger, Christmas, and Gray. And so, right, in my report I wrote, I don't know, 8 years ago for FX Street, what I said is you want to probably discount your headline model by this number. Okay? So, if you thought, let's say 500,000, this says 480,000. Okay? You have to update your model. Most people don't do this. This is my alpha. And again, I don't believe anyone ever covered that report on FX Street, ever. Right? Until I wrote that report. Now it's here. So I don't know if people scratch their head and they're like, where does this come from? Well, that's my alpha, baby. So that's how you use it. And I wrote that in the report. And you notice they're also covering things like jolts, which we just talked. Okay? Another thing that is not on this list right now is wage growth, which is now pretty serious wage growth. I think wage growth has doubled in the last 3 months. From no wage growth to high wage growth to double high wage growth. So I think we're at like 5% now. It's huge. Okay. Yeah. Oh, how was the rest of my trip? Yeah, New York City's nice. Yeah, thank you for asking. Okay. Initial jobless claims, 202, ending in March. 4-week average, 208. So, like, why would you say that that was negative? Yeah, I'm not sure why you would say that's negative. Okay. I would disagree with that. Okay. Continuing claims, these are people on unemployment, but they're looking for work. Okay. 35,000 less people. So what that means is they either got jobs or they stopped looking for work. But statistically, out of 1.3 million, that's a rounding error. Meta says Miami is nicer. Yeah, I got you. I'm really due for a trip there. I'm super busy nonstop. It's crazy. For a long time, I'm super busy. Wayne McDonell foresee me in Miami. I always say it like I'm Bugs Bunny. Miami. That's how Bugs Bunny says it. I see me in Miami by the end of the year, for sure. We're going to do a get-together for sure. Especially if I can't do my big conference, which I can't do. I mean, look, I'm not planning it, so how could I possibly do it? But I got to get through this year, and then maybe next year we can do a big conference. But maybe we just do a meetup in Miami. We'll do it. I mean, it's got to be done. Well, it's just I'm not planning it, Raymond, and I got so much going on, and I got to plan it. I mean, I know what to do and how to do it, but am I negotiating even a small conference? Let's say it's $100,000 or $200,000 conference right now with them, and then putting together. No, I would want to do a Nashville thing, but we'll talk about that somewhere else. And so that ISM services is important. Wait, is this right? It's not released today, is it? I thought manufacturing was today. Look at the calendar. Look how it shines for you. See, manufacturing. But there's no services. Look, come on. See? Got to be careful. Got to be careful. So that's wrong too. So I don't know why this is negative, and I don't know why they're saying this is today. But this is today. And so you could look at the subcomponent of that, but that's at 10, so it's already kind of too late for your model. Joseph says Jupiter would be nice. Well, we're not really going for nice. We're going for easy. Earnings for companies? I don't know. All right. Okay. Robin says the Harvard Club looked amazing on the pictures. Yeah. Yeah. So, Harvard Club of New York City, which is 35 West 44. So that's where I stay when I'm in New York. So I was just there yesterday for a couple of days. Earlier in the week I was at the Penn Club. But they have no pictures of their building. So that's 30. 35 is Harvard. I think 28 is the yacht club. So it's so funny. The place is so small. Oh, here it is, the Benjamin Franklin room. So that's, and then I hung out down here in the bar and all that kind of stuff. But there you go. So Benjamin Franklin and Donald Trump went to that school. Okay, let me show you this one right across the street though as well. There's the building. So that's right next door as well. Really awesome clubs in the area. Oh, anyway, so that's all that. So yeah, I got back. How far are we now? We're pretty close. Just a few minutes, still non-farm payrolls. Great. Looks like Hogwarts. Well, Harvard was used as a model for Hogwarts. I can show you that quickly. That's just a Harvard thing. That's just a Harvard thing. Go here. And here hall 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 okay, you see this? Okay, you see does that look like Harry Potter to you? Okay, you see that? So that's Annenberg Hall at Harvard. And that's Annenberg Hall at Harvard. And that Annenberg Hall the breakfast, lunch, and dinner. And that fresh only fresh breakfast, lunch, and dinner. And that fresh only fresh breakfast, lunch, and dinner. And that fresh only. You're not even allowed inside. I had to get even allowed permission. Actually, a professor. I had not even allowed inside. Permission. Actually, I had not even allowed inside. Permission because I wanted to be in college. You're not even allowed in because I want to see college. You're not even allowed in because I want to see college. You're not even allowed in because I want to see college. How about that? Yeah, there we go. There's an echo. Okay, going back to this, right? What I was saying is you're not even allowed in unless you're a freshman at Harvard College. Okay. So you can see that this is very much one of those Harry Potter moments. After your freshman year is over, you go through a sorting ceremony. No, they don't bring out a leather hat that talks, but there is a sort. Harvard for hundreds of years has had a sorting ceremony, and you are sorted into your house. No, not Slytherin, but you, right? But you might go to Winthrop or Eliot House or Quincy House or Leverett House. Okay. So anyways, so you know the author ripped all that off of Harvard. So yes, if you notice a similarity. Okay. So I'm going to start by putting these on smaller time frames so we can watch the overall reaction to non-farm payrolls. And you'll see the instant response. Well, my voice should be fixed by now. Yeah, we could do Brent. We'll do WTI. We'll do Bitcoin. Excuse me. Yeah. So anyways, thank you for being here. Thank you for being part of this historic webinar. 16 years of doing this. If you need additional resources, like you like my style of training, visit FXBootcamp.com. It's $88 a year. You will learn things like macroeconomics, central banking policy, swing trading, day trading, 65 hours of, very detailed training videos. 65 hours for $88. Not too bad, man. If you need a broker, one that, yes, has fast execution speed, narrow spreads, and huge swaps, all that's good. But you also want one based on business ethics and values. Trader's Way earned my loyalty and my respect. I think about 8 years ago, during the Swiss National Bank debacle, many, many big brokers went out of business that day, presumably because they were trading against their clients. And Trader's Way was completely unaffected. So I contacted them. And I'm like, how you doing? Banks are going out of business. Brokers are going out of business. What's going on with you guys? And they're like, oh, we're totally fine. We executed all the trades just like our clients wanted. So we're fine. We executed the trades. We're not negatively or adversely affected by that. And I'm like, I love you. So if you like that, tradersway.com, open up a demo account. Give them an opportunity to earn your loyalty and respect. Rob says, you sound fine, Wayne. I'm guessing you're using a studio mic now. In sooth, I know not why I am so sad. Okay. Coolio. So what you do when you're trading or at least analyzing indices is you want to look for strong and weak. Okay? I don't know if it'll happen today, but I'm looking for yen strength and US dollar weakness. Now you might totally disagree with me, and I understand you. I'm not here to argue with you. I'm just telling you what I'm looking for. And it may not happen today, but I'll get it. Don't you worry about me. Rob's been doing 8 to 5. That sounds terrible, Robbie. I'm really sorry for you. Yeah, sounds terrible. Well, the upside is you're probably awake every morning at exactly the same time and go to bed every night exactly the same time. Right? Never know what day it is. Yeah, but limit orders are great. They're fine. It's all good. I wouldn't worry about that. All right, so when you guys get a headline, let me know, eh? $431, that's about right. That's okay. Don't worry, that's fine. Thank you for being so quick. Appreciate that, Lucas. Yeah, that's perfectly fine. You know, no major move going on yen. Little bit of dollar strength. Little action on the Kiwi. Little on the Aussie or pound. Man, I've been traveling, so I should probably be downing some vitamin C, huh? Oh, that's interesting. Thank you, Peter. Yeah, the revised up to 750. That's cool. Kay asks, are we selling or what? If you don't know, you should not trade. What you just declared is you have no idea what's going on. So you should stop trading. You've declared you didn't have a trade plan earlier today or yesterday or even a week ago. You're declaring that you're reacting to the news. Okay, cool. I suggest you don't trade. Yeah, all right. So this goes back. Let's cover what I've done. About 2 days ago. Wow, hang on. About 2 days ago, we were up here. And I suggested my plan A would be here and my plan B would be here. Okay, Kay? So that was days ago where this was plausible and so was this. And so we prepared for the fall and it fell. Cool. And now there might be an opportunity for a rise. Okay, so let's say, Kay, we're here and we're like, hey, I wonder if it bounces at this price. And if it does, maybe you want to buy it. So now you'd be on like a 5-minute chart and you would have a plan based on that. So you could analyze this and say, if it comes, okay, so we've had this down. Okay, now if there's sort of a move like this, you can slowly tiptoe to the upside. Okay, this would be a plan A buy. That would be a plan A entry. Okay, now you could just buy it here, and that's too aggressive for me. You know, I'm conservative. Okay. So yes, thanks to Lucas, we knew 431 was the headline. Thanks to Peter, we got the 750, which is the revision, and that's red hot. Okay, the labor market is red hot, and that probably tells the Fed if they raise 50 basis, if they raise interest rates by 50 basis points at the next meeting, that the economy should be able to handle that. When's the next meeting? Is it May 4th? Does anybody know? I can't really Google it in the middle of a live stream. All right, we're already above the line in the sand. What you gonna do? What you gonna do? I got a pocket full of pips and my homeboys do too. Ave Maria. Ave, that'd be great if every time you walk into the room, you know, angels sang Ave Maria. Yeah, it is May 4th. Right on. How long have I been trading? Somewhere around 2001. Yeah, Robbie, I don't think that's actually going to happen, but we'll see. We'll see. Maybe I'm out of date. I did spend most of yesterday traveling. But when somebody says, oh, yeah, people are going to buy oil in rubles, bullshit. Excuse me. So, yeah, that's what I think. But I can tell you there was a time many, many, many years ago. I think I met this guy. I can't even remember now where I got the story. But he made not billions, but he was a multi-millionaire because he was selling Russians veggie burgers in exchange for oil, because at that time they were embargoed. You were not allowed to pay money for Russian oil, but you could trade. It just couldn't be money. And of course, they had no food because they're socialist pig dogs. Not the people, but the country, the government. So anyways, there's no food, obviously. So anyways, so he was trading veggie burgers, which I thought was pretty cool. Then after that, what he did is he went into Eastern Europe after the Iron Curtain fell, and he bought the old mining equipment. And he was getting them cheap. Just these countries needed money, and for whatever reason, it was the mining equipment that they'd pull it right out of the mine. And the part I remember most is that the mining equipment would get so hot that the mining equipment would have to sit in a field for a year or two to cool off before he could bring it home. Which I'm like, really? And so anyways, he paid for it and had to wait for a year or two before he can transport it. But interesting dude anyways. Okay, so anyways, we're getting our stability here. Let me change this to a single instead of a fiver. Okay, and we put that plan back. And you can see it maybe potentially developing here. What? What's up, Rolu? Okay. What do you think? It's pretty close, right? Let me try to put this back. I mean, they don't line up now. But if we are looking, so we have this down. You see what I did over here? Up, down, up, down, up. Okay, you see, we might be sort of in this area now. Right, this kind of area here. So let me erase that. Just trying to highlight it. Okay, you see what's going on? So another way of looking at this, let me change the temp on us. And let's do it that way. If you got a problem, yo, I'll solve it. Check out my hook while my DJ revolves it. Ding, 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 ding. Ding, 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 ding. Ding, 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 ding. Ding, 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 ding. Stop. Collaborate and listen. Ice is back with a brand new invention. Something grabbed a hold of me tightly. Flow like a hawk both daily and nightly. Will it ever stop? Yo, I don't know. Turn off the lights and I'll glow. To the extreme, I'm like a punk, like a vandal. Light up the stage like a chump with a candle. Yeah, he wrote that. You're like, what? Is that what he was saying? Well, that's what happens when you're a lyrical assassin and house flipper. I will remove that. I don't want to complicate the things. Right on, Raymond. So Raymond just made money because he. I love you, man. I love you. You're like, yep, Raymond just made money. Gut. Das ist gut. All right, cool, huh? All right, we'll leave this for a second. Let's go back to the indices and see how the rest of the world is reacting. Pound is down. Aussie is up. Euro is up. CAD is down. Swissy is down. Yen is down. Dollar's up. Cool. Well, lots of going on. I want to zip over now to the yens. Okay. See how that's shaping up. Okay. Now, I want to sell this high. So, okay, some people might look at this candle and say, oh my God, buy it. And I'm like, yeah, you should buy it, dude, because I'm going to sell it later. So I need you to drive it up high so I can sell it. So anyways, that's that. You're probably going to look at a roll reversal and trade it like that. What do you stink? Smell like a plan? Yeah, you could do that. Okay. I want to have this go up MOA, and maybe around $1.36, I'm going to drop it like it's hot. Because I can, because I'm the man. Okay. So, okay, maybe it's like retail, institutional. I don't know. We'll see. Okay, cool, interesting. All right, all right. Now let's go do gold, oil, and Bitcoin. Well, let me ask you before I do it. Is anybody interested in gold, oil, and Bitcoin? Which one appeals to you most? Gold, oil, or Bitcoin? Gold, oil, or Bitcoin? Please answer. Gold, oil, or Bitcoin? Yes, Roger. No, I was just on the road and all that kind of stuff. Gold, oil, or Bitcoin? Oil, oil, oil. Gold, gold, gold. Bitcoin, Bitcoin, Bitcoin. Raymond says the new safe haven. Well, I don't know about that. Hey now. Yeah, settle down, bro. Settle down. Whoa, whoa, whoa. Settle down. Yeah, I don't know about no safe haven. Okay. My oh my WTI. Okay, my oh my WTI. Cool. This has been coming down for a while. We're having a bearish week. And one of the things we covered on this gap on Sunday, last Sunday, the day trading group and I met, and we saw this gap and we said WTI down, okay, JPY up. Not yen pairs up, yen up. So yen pairs down, AKA, oh, I don't know, odd yen down, for example. Okay. Can anybody confirm that? Raymond says, called it to the T. Yes, I said we're going to drop it down to 102. That's true. We were there, and then we hit 102, somewhere around that. Cool. That is a fact. Cool. Nice. Lucky me. Lucky you. Lucky me. Lucky you. All right, cool. But not only this down, but Japanese yen strength. Not weakness. Strength. Yen pair weakness. So you go back to this at the time. It was this. Anyways. So this is still going up, which is perfectly fine. Some of the other ones were much more sensitive. Okay, remember we have the upward action here, which I get. It's totally fine. So again, like here we are Sunday night, right? No. So anyways, we had that some down. Wait, that's not Sunday night. Whoa, that's a 15er. This one. Okay, so we were here watching WTI gap down, and we're like, oh yeah. Okay, cool. By the way, in my book, written, I don't know, 15 years ago, think about that. Written 15 years ago. A lot of things have changed in 15 years. I said, if this happens in that way, then we're likely to go back here. Can anybody confirm that? In that situation, we go back to this price. Like, how many people know this? Like, this is part of your trading behavior now. Yeah. Well, that's pretty helpful then, huh? Okay. Yeah. Yeah, well, it's got to be helpful. Ingrained, yeah. Well, remember, nobody taught me, so I got that through observation. Oh, a couple people are like, was NFP good or bad? Oh, slightly worse than expected. Irrelevant. You don't understand. Like, has it impacted anything? Well, the major impact is it allows the Fed to raise interest rates by 50 basis points on May 4th. but we already knew that was likely to happen. It's already priced in. We're only interested in we're not interested in any individual NFP. They're kind of irrelevant 99% of the time. We're interested in the trends. Now, we looked at the trends in ADP. We looked in the trends of ISM. We looked in the trends of JOLTS. We looked in the trends of Challenger Christmas and Gray mass layoff report. We're looking at all these trends, weekly jobless claims, okay? The unemployment rate. Do you know what direction it's going? Is it going up? Is it going down? Is it not moving at all? You should know all of this. That's what's relevant. We looked at the headline number, which is as expected, so that's priced in. And then what wasn't priced in was the higher revision, which is good. So I'd call that good. Okay? But you need to take all this trend data from this data set. You just added new data to your data set, but it barely moved the mean, for example. But what really matters is that if the mean of the trend has not changed, would it change the behavior at the Fed? So Ekram's like, was it good or bad? What do you mean good or bad? That's so subjective. What do you mean bad? Hitler was bad. NFP is a data point in a data set. So it comes down to the numbers were high enough, which we all expected, to now allow the Fed to raise by 50 basis points. But we already knew that because over 2 weeks ago, Jay Powell was interviewed as saying that he would do it, which is a central banker's way to see what happens when he talks about it. The stock market didn't crash. The stock market didn't flip out. And now that rate hike at 50 basis points is being priced in. Okay? So you got to really think about trading a lot differently. This good or bad idea, it's. I mean, what do you mean? I don't know. It's a sample size, right? Okay. So Kevin's like, Kevin Kendall says 50 basis point high locked in for the next meeting. Well, that's what we've learned. So why don't we answer that now? Because you can say, well, how do you get that opinion? Oh, I don't have an opinion. Why would I have an opinion? What kind of trader trades opinions? A broke ass trader, a BAT. Either a bull, a bear, or a bat. Okay? Broke ass trader. All right. Let's do Fed Watch Tool. Knowing me, knowing you. Okay? Cool. Look, 74.4% chance Fed raises interest rates by 50 basis points. Say, I don't have an opinion. Right, Kevin? I'll say, oh, well, my analysis tells me that there's a 74.4% chance the Fed raises interest rates by 50 basis points. Okay? I don't have an opinion. I have a conclusion. And my conclusion comes from research. Okay? So I do things differently. Yeah. Well, I have a macroeconomics degree from Harvard. So they taught me that Veritas. Okay? I know the truth, and the truth comes from knowledge. Nobody's interested in opinion. So I only have the truth. And the truth is, according to research, 74.4% chance of interest rates going up by 50 basis points. Cool. Sweet. Great. Okay. Yesterday, it was 69.4. You see? Probability went up. Okay, so anyways, I hope that brings me a little closer to smart money. Okay. 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 If you go 62 plus 21, so let's just say there's an 80% chance by the June Fed meeting, okay, of having very significant interest rates above 1%. Okay, 80% chance interest rates are going to be above, in fact, above 1.25. Interesting, huh? Interesting. By June 15th, interest rates will be, let's say, $1.50. Okay. Well, yes, the yield curve, just the quick way of talking about the yield curve is the Fed is changing interest rates at the lowest level, at the Fed funds rate. It's basically the overnight rate. The shortest term loans being given from bank to bank. Okay, bank to bank overnight loans. The shortest duration there possibly is with the lowest amount of risk, because they're not, Bank of America is not likely to default on an overnight loan, and interest rates have very little impact because they're not likely to change overnight. Okay, so the Fed is the one that sets that rate. Now, they don't do it through law. They do it through open market operations. But that's the lowest level. But then the Fed funds rate impacts things like, let's say, the prime rate. And that's the rate at which banks loan to their best customers. So that would be higher than the Fed funds rate. Then the next one would be your normal loan rate. Then the next one would be things like mortgages. Now, a mortgage is a 30-year loan. And so that's impacted differently. So what about the 2 and the 10? Well, if interest rates are going up on the short end of the yield curve, then people need to adjust their holdings in those portfolios. And what happens is as interest rates go up, and it's not even an interest rate really, it's a yield. If a bond yield goes up, then the bond you're holding now loses value. So people holding those 2 years are dumping them. For interest rates to go up, bond prices have to fall. So you can look at people just bailing out on the 2 year because it's impacted. Your old bond is losing value. It's a bearish market. So traders dump it. Investors dump it. They move around on the right, and they adjust their portfolio. So it just shows you that borrowing costs are going up. Okay. Now, when the Fed does their BSR, and that's much more interesting than what's going on right now, but the balance sheet reduction, BSR, okay? So let's do a yield curve. So let's say this is a yield curve. This is your Fed funds rate, 1 year, 2 year, 5, 10, 20, and 30. Okay. Okay, yield curve would probably look kind of like that. Well, right now the yield curve is changing and it looks a lot more like, this right now. So the Fed is doing things. First of all, they ended quantitative easing, which lowered interest rates. So that put pressure here. So now they are no longer doing that. So the normal thing would be now, right, that this would go up. Now that the Fed isn't pushing that yield curve down, it would naturally go to a higher rate. You have to understand, it should never have been that low to begin with. So you got to be careful. When you hear people say, oh my God, there's an inversion of the yield curve, that means the stock market's going to fall and the economy is going to crash. No, it doesn't. Okay? No, it doesn't. What people, I don't know what other people are doing, but let's just say, no, they don't really understand. They think they understand, and they read a book somewhat, and they've been preaching the same nonsense forever. But no, that doesn't, because what is actually happening is the Fed has been pushing the yield curve down, and now it's going up because it needs to go back to its natural home. It needs to go back to the natural rate. And the Fed kept it unnaturally low. So now that the Fed's leaving, it needs to go high. Well, what about the inversion? Well, this is because the Fed also went in and pushed down this end of the yield curve. Okay, this would be pushing down the Fed funds rate and all the things tied to it. But when they bought 30-year mortgages and their mortgage-backed securities, they drove down the yield on the 30-year because they wanted to help the real estate market. Well, hell, if you didn't refi your mortgage a year or two ago when you could get a mortgage at 3%, then if you didn't do it, shame on you. I don't know what you were thinking. I don't understand. So, anyways, here we are now, and the interest rates on this end of the yield curve are now going up because the Fed's gone, leaving that. So that's gone up a little bit. Okay. It's not quite that low. So now everything's gone a little higher. By the way, this is percentage on this side. Okay. So now this has gone up a little and getting closer to natural rate, but this hasn't gone up. Why? Well, the Fed still has a whole bunch of mortgage-backed securities on their balance sheet. So the Fed funds rate's going up as they're exiting that market as buyers. That's great. And now all of a sudden the curve will continue to be flat and invert somewhere as the short end of the yield curve goes up. 1 year has to go up, and the 2 year has to go up, and the 5 year and the 10 year, they're all artificially low. And that's the part that people just are not thinking through. All they know is they were taught in their mediocre business school that if the yield curve inverts, that it means the stock market's going to crash. Well, that's just such a simpleton point of view. It's not wrong, but the level of misunderstanding is gross. So anyways, yeah, this will go up and it'll invert for a while. But now, right, the Fed has artificially manipulated the long end of the yield curve to lower interest rates so people can buy houses and stimulate the economy that way. Well, now when the balance sheet reduction starts, they're going to sell off their mortgage-backed securities. Okay? Which will raise, so let me do a third color here. This will stay relatively low. Let's say it goes a little higher, and then this will start to happen. And the inversion will go away. It's just the inversion, let's say the yield curve normalization process always starts with the short end of the yield curve and will always produce some level of inversion because it takes a longer time for the long end of the yield curve to rise above it and revert. Okay? And so let's say 3 years from now, okay, the Fed funds rate will probably normalize. It will probably be higher than normal still, But let's say we have a Fed funds rate of 3%. I'm just making up a number. That might sound high, but we got a lot of time to go. Okay? But the 30-year will probably be at 5%. Okay? And in that case, the 10-year will be at, let's say, 4%. And everything will be right as rain. And it's that angle of, 3, 4, and 5. Okay? Okay? So when people are panicking, like, oh my God, the 2-5 inverted. Oh, wow. Okay. You panic now. Panic. Freak out, bro. Freak out. It must be scary, I'm telling you. To trade with that level of fear must come from a feeling of lack of control. But my belief is the lack of control is the lack of understanding. Right. On says they will argue the 210 inversion will lead to recession in 18 months. And they believe that. They understand about 30% of what the model is designed to do. So yes, they've read that, and that's as much as they understand. All they know is that rule of thumb. Somebody taught them, whether it was a college professor or some author of a book or maybe somebody in their firm. Yes, that is true. A 210 inversion will lead to a recession in 18 months in a normal market. Oh, what? Wait? Whoa, what? We just went through years of Fed manipulation. And by the way, that's not a bad thing. The bad thing is what the federal government did. That was maybe not completely bad, but it had consequences. But what the Fed did was make an abnormal market condition. And we are re-normalizing. And they're missing that whole point. So they have sort of I would say, an undergraduate first-year economist level of understanding, which is, fine. But I'd be careful. Okay? When you look at the amount of cash American companies have, when you look at the amount of cash Americans have in the bank account, and you measure things like pent-up demand because of, in many cases, you couldn't buy stuff with your money. So there's demand for stuff. If you wanted to buy a fence last year like I did, I had to pay, right? I had to pay double for my fence. I had to pay double for this. I had to pay double for that. So a lot of people can't afford to pay double. So they hold on to the money and they wait, or they find a substitute. You either defer the purchase or you find a substitute. Okay? So there's a lot of pent-up demand. There's a lot of money sitting in this market. The Fed and the federal government added a combined $10 trillion to the U.S. economy. People have jobs. People are making money. Housing's going up. The stock market's going up, okay? People are buying iPhones. People are buying houses. People are buying cars. People are buying things. And this is the end of the economy? That smells like a recession to you? I'd be careful, huh? I'd be careful with that logic. Yeah, everybody's got money, so... And now you might argue, you're like, hey, my cousin, he doesn't have any money, Wayne. Look, I'm talking about an aggregate. So when you study the deposit levels in retail banks, what I'm saying is, how much money does the average Joe have in his or her bank account right now compared to 3 years ago. And there's much more now than 3 years ago. Much more. So there's a capacity now to spend. Okay? Okay? So people saved and they wanted to spend the money, but they couldn't. So for example, I bought a PlayStation 5. Okay? I had to pay $1,100 for it. It's only worth $400 or something, $500. I can't remember what they were. I paid a lot more. I have some money. I converted my money into an asset. I wanted to play Far Cry 6 at Christmas time. So I'm like, I don't care how much it is. I'm getting one. Okay, great. Someone else might have said, well, I only got the $500, so I'm going to wait until prices come down. Good. Well, those people have that money in the bank, and they're deferring their purchase. Okay, so that's a future purchase that may arrive. But I'm looking at the data. How much money is in the economy waiting to be spent? That's a demand side of the equation. Okay, now the supply side has been our price shock. Demand's not a problem. Okay, demand side is not a problem. So going back to the question of, well, do we expect a recession in the next couple of years? If people had no money, if people had no jobs, then where's the future demand going to come from? If people had no money in the bank and were expected to lose their job or felt very insecure about their job, then future spending would not be there. Okay? Coupled with high inflation, that would show you profitability of companies would wane. Then once those companies start reporting to the stock market that they're not able to make money, then we have a problem. 3 months go by, still there's no demand for products and services. Maybe those companies start laying off a few employees or shutting a few stores because they're not making sales, but prices are high. Slow demand, high prices. That's stagflation, right? So then at the end of the second quarter, those companies report again and say, hey, yet again, we're struggling to make money. The stock market comes down and there you go. But what's the fact? Yes, we have inflation. Yes, it sucks. Everybody hates it. But we have money. People are spending on stuff they can. People have jobs. And yes, they're making more money than they did a couple of years ago. So wage growth is up 5%. Prices are up 7%, but whatever. Those prices will likely normalize. But the 5% wage growth will stick. Which means I would say in 2 or 3 years, right? Future demand, not the future demand from now, which means you still got some of your Biden money. Okay, this year you're going to spend some of your Biden money. Something's going to show up in the store, you're going to buy it. Or maybe this summer you go on vacation and you get a hotel room, you go to the beach, and you spend your Biden money that way, which, by the way, a very large amount of Americans did that. Okay, great. So that's then. But now you have a decent job. There's lots of jobs available. There's lots of competition to get employees. Right now we have 5% wage growth, which is ridiculously high. That's likely to stay around. So this year you spend your Biden money, but what about next summer? Well, you have a good job and your wages are sticky. So maybe you're making 5 or 10% more than someone doing that job 3 years ago. So let's say you make 10% more money than somebody doing that job 10 years ago, or maybe even you. You used to make $50K, now you're making $55K, right? Hey man, that's pretty reasonable money. But the thing is, inflation will come down. Oil prices will normalize. Other prices will normalize. The supply chain will normalize. The amount of units available, aka supply, will go up. Therefore, per unit price will come down. But your wage will stay higher relative to the past. So inflation will come down. Well, is it next year or the year after? Well, it'll come down next year and the year after, but your wage will stay high. So therefore, future demand, not this summer, next summer and the summer after that, the future demand will come from prices are normal and you make more money than you used to. You feel good about your job. You feel good about your future. The value of your house went up. The value of the stock market has gone up for a couple of years. So your retirement's booming. And you're like, everything is right as rain. And you go back to the beach. In 2023 and 2024, by then you maybe even buy a little, a little beach condo rental that you stay in a few weeks of the year, and then you rent it out on Airbnb the rest of the time. And because you got some extra cash and market's up, so maybe you put that to work by owning some real estate, and everything's golden, man. Or you freak out. Oh my God, the 2-5 inversion, that means it's all over. I'm like, really? Did you even try to think it through? And the answer to that is no, they don't. Okay, they don't. Well, they think it through as far as they can. They're doing the best they can. But again, I would argue that might be the problem. That is the best they can do. A general rule of thumb. Wade says, hey, maybe the lockdowns will change people's patterns permanently. That can happen. And we saw that after the Great Depression, that there was an entire generation that just didn't spend money or even invest money. Okay? They just kept it in cash. And then the next generation started investing in the stock market. And then the next generation started investing in stock indices. And the next generation... Okay, now we're at this, much different world. The type of change, in this case, we're saying there's a pandemic. People always thought of the pandemic. I mean, I can't say always, and it wouldn't be exactly the same globally, but nobody really thought, from what I don't think anybody thought this is permanent. That you'll never leave your apartment, that no one will work in an office building. Everyone will work from home, and that's how we're going to be. There was always this idea of, well, by the time summer shows up, this will be over, and we'll go back to a normal life. And then not this summer, next summer. Okay? Okay? But it's temporary. You understand? It's like high gasoline prices. The last time we had high gasoline prices, one of the things that happened was the price of a General Motors Hummer. Okay? H1s, H2s. Okay? I had a friend, he had an H2 with like 32-inch, not 22, 32-inch wheels on it, right? Tires. Anyways, the value of his H2 dropped significantly because nobody wanted to have to pump in $100 to fill the gas tank and then 3 days later have to put in another $100. So the value of those vehicles dropped exponentially. And then they're like, well, look at Leonardo DiCaprio. He's driving his Prius through Beverly Hills. I want to be like Leo. And all of a sudden, people were interested in driving Priuses. But do you remember back then, all of a sudden, the gas pedal would stick? Remember that? And you're like, well, you can get a Prius. It's really good on fuel efficiency, but you'll crash and die. Right? But anyway, so people are moving to a Prius, right? And then, so that happened for about a year. And then whatever happened, gasoline prices went right back to normal. And boom, everyone was driving Hummers again and H3s, H2s, I should say. And just went right back to what we were doing. It was temporal. It was a temporary change in behavior. And so, Wade, that's how I would look at this. Like he says, well, maybe the lockdowns will change people's spending patterns. Yes. Permanently, I don't think so. You can call it transitory if you want to. So anyways, that's I'll get off the soapbox, but yeah, you need to think things through a little bit. So study macroeconomics. All I can tell you, and I've been giving you this message for a long time, you cannot rely on anybody else to do your research for you. And almost everybody, right? Almost everybody has their own opinion. Some of them are based on research. Some are based on rules of thumb. Some people have no opinion. They're all reactionary. If you are going to be a success as a professional trader, your main job, I want you to think about this, right? Your main job is to do your own research. It is the source of your value. If you want to own and run a small business that creates value, you must do your own work. Now, what do I mean by that? If you're going to manage other people's money, they will come to you for advice. Hey, Kevin, what's going on with the war in Ukraine? Hey, Kevin, what's going on with the Fed? Hey, Kevin, what's going on with yield curve inversion? Hey, Kev, where's the stock market going to be at the end of the year? Hey, Kevin, what long-term investment should I make over the next 3 to 5 years or even 10 years? If you look at them and go blink, blink, blink like Ren and Stimpy, blink, 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 okay? You have no value. You just have no value. You're like, I don't know. Okay, I don't know. You're like, I don't know. And well, if the 2155 crosses, I'll buy it, eh? Like, that's it. That's all you got. Okay, you're a trader, and hopefully you have consistent returns, and you probably can. But the thing is, you'll have a very, very difficult time attracting clients because you're not really adding value. Okay, some trader and investor in the foreign exchange market that does their own research and develops a bias and trading strategy around their hardcore research adds more value. Okay? Therefore, right? They are worth more. And if you can't or are incapable or unwilling to do that kind of work, then you're worth less. There's one trader does their own research, worth more. One that can't do it, worthless. Worth less. They are worth less. The definition comes from the value creation. You don't create value. You're simply an hourly worker. You sit down in front of your charts for 2 hours. You place a couple of trades. You make 30, 40 pips, and you're done for the day. You're an hourly worker. You don't own the Starbucks. You work the cash register at Starbucks. Okay? Someone that is creating value and has wealth owns the Starbucks, owns stock in the Starbucks. Okay? So you're either an owner or a worker. The reason I say that is your money can work for you, okay? And to make a longer term trade, so let's do like exotics. I got one over here, okay? To make a longer term trade, okay, this is one we did last non-farm payrolls. To make a longer term trade, so I've been in this one for about a month, okay? I shorted right here. My stop's at break even. We're right here. To be able to make a trade like this, you don't have to be a genius. You don't have to be the world's greatest technical analyst. No. But you do have to have a strong conviction that this is going to go down, and not for a day, but for a month or more than a month, maybe 3 months, maybe 6 months. How do you know that? Value creation. So I've been in that trade 1 month, and I have $8,000 profit. Almost exactly, which is cool. Okay, plus I earned $300 this month in swap. Okay, so I have a 10% I have a 10% internal rate of return via interest rates, interest. Okay, in interest, right? Just in interest alone. Okay, I've collected 10% for the month. But on pips, I've turned $3,000 into $8,000. Cool, that's a decent month. Okay, I'm up, what is that, 275%? When you include my interest? 275% for the month of March. Hey, that's okay. You know, I was traveling and stuff. I was busy, man. I just got 4 hours sleep because I got off an airplane and zipped back to my office so I can trade. Yeah, well done, right? Probably earned more than somebody, you know, picking up 25 pips here, 30 pips there. Okay, and then negative 30, then plus 28, and then negative 14, and then plus 15, and then plus 3, and then plus 50, and then negative 38, and, you know, back and forth. And at the end, what do you got? I don't know. Okay, so that's a half decent month, right? 275% return on investment. Cool, yeah. Now, my point isn't the IRR, isn't the ROI. My point is that we talked about this trade weeks and even months in advance, and the better trade is above us. We set this up a month early. There's multiple FX bootcampers on this trade, and they're in at a better position. But I'm able to hang on. Why? We analyzed fundamental data and macroeconomics and seasonality. And we have conviction, not for the day, not for the week, for the month, and maybe more. Cool. That's called value creation. Okay? Value creation. Focus on your value creation and you will have a successful small business. Okay? Okay? Cool. Okay? That's it. Value creation. So please focus on that. If you want to learn macroeconomics, if you want to learn things like how does a central bank manage its balance sheet? There's something like, I think it's a 15-hour training course at FX Bootcamp covering just central banking. And by, I think, the 4th or 5th hour, you're learning how to manage the balance sheet at a commercial bank and understanding the management decisions behind that as things change day in and day out, and how they interact with the Fed. Things like, right, what's the reserve requirement ratio and how much cash has to get parked at the Fed every night? And what if there's a big deposit, or what if there's a big withdrawal? And how does the commercial banker handle that? Okay. And the reason you learn that is, well, if you don't understand how to manage a commercial bank, how would you understand central banking policy? You see, like, guys, it's $88 a year. I know you're thinking a month. $88 a year. Like, come on, get on, join. Okay. There's a whole other one on macroeconomics, and it's really You know, it's high end. It's not fluff. It's legit. I'm telling you, you're going to learn very legit macroeconomic topics. Okay? I just didn't do any of the calculus. So we don't do the calculus, but you get the concepts, and it's no joke. All right. So anyways, let's move on.com. Thank you, Kevin. Well, I'm passionate about this stuff. And I know out of 30 or 40 people listening right now, maybe one person will make a change. Out of 30 or 40, maybe one person. Okay? So all I know is I'm here for that one person. Cool. So there's your yen. Okay, so we got a breach to that side. Cool, great, fine, great. Gonna mark this up here. Okay, great. Oop, come on now. We have it down here at the bottom. I mean, I did this a couple of days ago, so let me kind of do that way. Yeah, well, Johnny's definitely one of those guys, right? You got some heat there, Johnny? You still got Duraflames in the living room. What's up, Mo? So comfy. Wow, that is good news. Yeah, Darko's committed. Is FX Bootcamp suitable for a simple retail trader? Absolutely. Okay, interesting. Here we are at that elevated pace up here, or price, I should say. Yeah, we are getting close to the 200th. Yeah. Look at the stars, look how they shine for you. All the things you do, my love, and it's all yellow. All right, hey, go to Trader's Way and open up an account, huh? You click right there for demo, huh? Come on now. Let's do it. Join the team, join the family. Let's go. Tradersway.com. Your skin, oh yes, your skin and bone turn into something beautiful. I hope you know. Actually, I wanted to do, I think I want this one. Oh, I love you so. Oh, let's take a look at the S&P 500. Yeah, I thought that'd be good. Yeah. Moderator, are you still here? Moderator's probably playing games on her phone. Hey, moderator. Moderator. Let's see. Man, not having to listen to people do webinars all day. There we go. Let me move that out of the way. Yeah, there you are, moderator. All right. See, we got the world's greatest moderator. Amazing. Hey, moderator. Hey, how about this? We contact, I don't know who we should contact, not Francesc, but we should, whoever I need to talk to, let me know. But we have the 200th coming up. And maybe as something special we can do, FXStreet applies to the Guinness Book of World Records to the longest continuous webinar, right? Longest continuing webinar series in the world or in history. On the 200th, maybe, right, we can apply. What do you think? Get in, FXStreet gets into the Guinness Book of World Records? Okay. Could be interesting. Yeah. All right. Cool. All right, let's take a look at this. Okay. What's going on here? The concern here is that Fed, okay, raises 50 basis points, 50 bips. And the stock market, this is the S&P 500, says, oh my God, that will slow demand. And create a recession. Okay? That's what that is right now. Now, you might believe in it. That's probably what they're talking about on TV right now. Well, Raymond, we've been doing this webinar longer than YouTube's been a company. Okay. Longer than Zoom has been a company. Okay. So anyways, that's how the market's reading it for now. I'm sure that's what they're saying, all the talking heads on TV. No, Johnny, because that happened while I was on the road, and I need to find out the details about that. Okay? So I don't want to talk about it yet, but, supply goes up, price comes down. Okay. Okay. So anyways, that's what that's all about. So we'll see. Okay? We'll see what's going on there in a little bit. That's fine because I still have some cash that I want to allocate. So to have another down day, I think we had a couple of mediocre days in a row, and another down day might get me some prices. The problem is the individual stocks I bought are all still going up regardless of the stock market coming down. So, oh, woe is me, right? Oh, my stocks are all profitable even though the market's coming down. Yeah, but I do want to allocate my last pennies. Okay, so that's kind of interesting, right? Take a look at crude, because we already did WTI. Looks like that ain't loading, so maybe these ones here, they don't load. Wheat. I guess these ones don't load. I was just playing around with web the other day and never used it before. And I'm like, oh my God, S&P 500 is on here. All right, so that's cool. So these ones don't load. This will load though, right? No, but FTSE will. Good. All right, well, I'm okay with that. FTSE responding well. Look at the price action. Okay. You still got to be worried about the top here. Okay. But there's a trend here. So what you want to do is keep an eye on for here. And therefore, it looks like it's breaching. Okay. We call this trapping. And then there's your roll reversal. It's going to go up here and it's going to hesitate. Now, will it reverse down back to the bottom of this range? Well, we don't know. But if it breaks above, let's say, 76, then you can catch a dip in the future. Okay? But those are the levels you want to watch on that. Look at the DAX. Okay? Much different situation. So, you're going to mark these areas. And you're going to mark this area. Okay. And then you even got to mark this one. So there's a lot. I don't know what you want here, the real body or the wick. Okay. There's just a lot going on here versus the other. Okay. So if you follow where price is now, we're stuck on this lower one, right? You're like, there's so much going on to hold this down. Oops, that was supposed to be. Okay, I can do it this way. Pachow. Okay, there's just a lot of weight on top of that, right? See you on Sunday, John. All right. Yeah, for sure, eh? Just looking at some of these, there's some nice little pairs here. Cool. Yeah, some nice pairs here. Just kind of going through them. Like I don't trade the MT4 web, but it's kind of interesting, right? That's right, Master. Yeah, because I was traveling last night. Yeah, I think that's fine. 4 p.m. will be fine. Let's see. All right. Dude, I have a lot of cash I need to deploy. I put limit orders to catch pullbacks and they didn't get triggered, so I got too much cash. I know, problems, right? Only one stock is red today in my portfolio. All right. So that's all right. Yeah. So I started buying in January and some more in March on the double bottom. And some of these stocks are great. 10%, 32%, 5.5%, 4.5%, 4%, 8%, 63%, 34%, 14%. I have a few negatives, but that's all pretty good. Yeah, that's pretty good. Up about, yeah, anyways. Well, no, but what I mean by too much cash is I already allocated and earmarked that cash to buy some stock. Now, I took some profit on one that I thought I was overexposed to. So I reduced my exposure to it, aka took profit. And then I allocated that money to buy dips in 2 other stocks. And they came down, but not down far enough, and then they went back up, and so I haven't been able to redeploy that cash. So that's what I mean, like out of my allocation model, I need to be in more investments. Okay, so I have too much cash right now. But it's just it's not me. I don't have cash. If you have cash, you're poor, right? So in this case, I accidentally have too much that should be invested, that should be deployed, because therefore my money is making me money. Okay? Cash is trash. So it's all just portfolio construction. Cool. So anyways, yeah, interesting. Cool. I want to go back and take a look at some of the other stock indices. It's just good to see. Cool. Japanese stock market. Okay. Very interesting. So we'll see how this behaves. Back out onto a 4-hour. Okay. Notice that this is the Fed meeting. Do you think Fed meetings are important? Huh? As the Japanese stock market, it was coming down before the Fed meeting, and then it just took off like a rocket ship. Cool. Maybe related somehow, eh? Take a look at Australia, see how Australia is doing. And holy smokes. Here's the Australian stock market, and this is the Fed meeting. Looks like it was kind of sideways, and then holy crap. Okay. Very nice. Luflit to your mum. Okay, this is kind of good, I guess. Okay, gold in terms of Aussie dollar, no. Gold in terms of euro, no. Gold in terms of dollar. Yep. Gotcha. Now, somebody said gold going to $2,000 now because of the Fed, or because of this. Why? You always have to answer why, and then don't say some esoteric thing. You should be able to tell me why gold would go up by explaining who would buy it and what is their intention. Then you say, oh, well, you're going to hedge inflation. Oh, okay. Well, we have inflation now. Why isn't it up? Then you say, well, Wayne, we used to be at 1900 and 1800, then it went up. Okay, good. Who bought it here? Okay. Who bought it during this trend? Who? Show me some proof. I can show you who bought that. The next thing is, are they going to buy it, more of it? Like, why would it go from 1900, let's say, to 2500? Why would it make a higher high? Why? Who? What's their intent? Why would they buy it? And I'm not sure if you could clearly show some research and then projections on why they would buy it back. Now, whoever bought it could also sell it. Well, what would their intent be? Why would they get out of gold and go back to cash or into something else? Why? And do you have any evidence that they're actually doing it? I could do that for you. So we don't know what they're going to do in the future again. Like, yeah, they could buy it, but you should be able to articulate why and who. And you could guess this way. You could say down and articulate why and who. So when people always say, okay, yeah, gold to 2,000, gold to 3,000. Okay, who and why? Oh, I don't know how to do that. Well, then don't tell me your opinion. I'm not interested in your opinion. Give me some facts. Show me. Oh, is that right? Well, there you go. Well, I got to do my speech anyways. Yeah, you got triggered. It worked. Yeah. It doesn't matter. I need to say it anyway, so I'm always happy. Just kind of cool to see some of these other pairs, but it looks like there's no liquidity partners for them. Yeah, that makes sense. Mexican peso yen would be great. Huh? Oh, that'd be so good. Well, I get it. Kiwi Singapore dollar. Yeah, that's interesting. Pound Singapore dollar. Yeah, I was on that one, huh? Yeah, I was on that one. Looks like getting out was just perfectly fine. Well, that's a 1 minute. Let's do 4 hour. Yeah, I bought it here and it went up and then, yeah, okay, that makes sense. Fine. Playing around with this is cool. Maybe I'll see if, maybe I'll have some trades on this. That'd be interesting. Euro ZAR, no liquidity partners for these. Euro ruble looks like it's active. Really? I have a feeling that that's not actually active. Full access. And then there's two of them. I don't know. I'll have to look into this. Interesting. Polish zloty. Killing the euro. Interesting. Hungarian franc. Interesting. Yeah, so these are actually futures. Interesting. Cool. Like I said, even though I've been with Traders Way a million years, I've never used MT4 Web or MT Web. So I'm just kind of exploring it. It's interesting. There's some coolness to this. But they look like contracts because I don't see swap. Krona. Interesting. Okay, that's cool. But there'll be a swap on this, right? Chart mode. Yeah, okay. Yeah, they're going to swap here. So some of them have swaps, some don't. Cool, I can play around with some of this. Kron. Yeah, long swap. Okay, negative swap on both sides. All right. But not on Zloty, huh? Huh, just interesting. Some of them are spot and some are not. Interesting. I have to inquire. Very interesting. So there's some potential here. Right? Yeah. How do you find who's buying gold? Do you have internet? Yeah. If you have access to the internet, I would say Google it. Spend 20 hours. Spend 100 hours. You'll figure it out. If you really want to know how to figure it out, you'd obsess. It's something that I'd like to learn. If you can teach obsession. I think if people were broken somehow, some OCD. Oh, I got a funny story for you. If you had some level of OCD where you obsessed to the point of compulsion, that you would spend day and night trying to figure it out, you would. For most people, it's too much work, so they don't do anything. So anyways, I'm at the airport, and I'm on the, I'm walking into first class there, whatever, the gangplank. And there's a young girl, maybe college age, and she taps on my shoulder, and she says, "Excuse me, sir. You have a hair on your shoulder. You have a hair on the back of your blazer." And she's like, "Oh my God, there's a hair. May I can I pick it off?" I'm like, "Oh yeah, thanks." And she's and all her friends are behind her like, "Oh, no, just relax, Becky," or whatever her name was. And she was obviously obsessive compulsive, and it was just like, I have to remove that hair. And so she removes it, and all her friends are just, it was really funny. It was just really funny. Like, if you could teach her how to be a currency trader, and she's like, "I can't sleep with the euro like this. I just can't sleep. Right? It was just funny." Yeah, no, and it was funny. Like it was a level of, she was compulsed to. She had to remove that. It was great. Right? And I had a velvet blazer on, right? So I guess, I don't know if it was my hair or somebody else's, but fall, it would probably stick to velvet, right? So anyways, she removed it, and then I removed my coat. So yeah, Leonidas says, "Yeah, teach me to fish and I'll fish for life." Yeah, but sometimes you just got to get in your boat, go out in the water and try. Okay. Cool. Well, you know what? I think I'm done. I'm done. It's 10. I'm done. I'm tired. I haven't slept much. I'm going to bail 30 minutes early. I'd like to thank our moderator for being the world's greatest moderator. I'd like to thank FXstreet for hosting me for 16 years. I believe this is the 16th birthday. Happy 16, everybody. Sweet 16. Oh, for sure. Yeah. I hope you have a wonderful weekend. I'd like to thank you for your time. 2.5 hours is a long webinar, and I know you have things to do. I know this was an investment, and I thank you for being here. And also for those that have been with me, or let's say this webinar, for 10, 12, 14, 15, maybe all 16 years. Thank you for being part of my life. You're good people. I like you and I respect you. I call many of you my friends as well as my colleagues. So I appreciate you in my life. You're good people. With that, without any further ado, peace on earth, and I mean that. I think if we all tried to spread some peace on earth right now, we could have a positive impact. Peace on earth. May the pips be with you. May your profits be above average. Thank you, FXstreet. Remember, if you need an ethical, quality foreign exchange broker, please visit tradersway.com. If you want to learn technical analysis, macroeconomics, central banking, swing trading, position trading, day trading, all that is available at FXBootcamp.com for $88 a year. Let's get going. See you, everybody.